From Daily Forex, it's Chris, and I'm taking a look at the US dollar Japanese yen pair and the Aussie dollar US dollar pair for the 20th. And you can see the dollar yen has pulled back a bit during the trading session on Tuesday, and that was in reaction to the $200 billion worth of tariffs that are coming from the U.S. against the Chinese. This is right at a potential golden cross. So I find this very interesting. This is a 200-day moving average. This is a 50. So if we can break above here, that should cross, and that should be a very technically bullish signal. A break above 111 could signify more continuation and certainly would make this cross. Otherwise, if we break down below 109, I think that would be negative. In the meantime, I would expect a lot of noise. Over here in the Aussie dollar, we have fallen pretty significantly during the day, down to the 0.7350 level. If you look at the weekly chart, you can see that's been an area of interest in the past. So it's not a huge surprise that we bounced there, forming a hammer-like candle. However, I think the 0.75 level is going to be resistance. So any rally at this point on signs of exhaustion should offer selling opportunities.